Hi everyone, it's Alessio Rostani, Core Finance. Today's show we're going to talk about, I believe the next topic we're talking about is the euro dollar here with Richard Perry of Hantec Markets. So tell us about the euro here.
Yeah, it's obviously broken out. That 1711 was the August 2015 high. That's broken out, and that also took it above a 38.2% Fibonacci level, which now reopens 50% Fib at 2166.
I imagine also, sorry to butt in, Richard, but I imagine when it broke that key level of resistance at the 117 you've drawn there, I imagine a lot of stops, like traders that put their stops right above there, and it's taken out those stops.
Yeah, and there's not a lot of resistance.
A lot of shorts getting squeezed out.
Yeah, short squeeze, and not a lot of resistance now. And what you're seeing is a lot of finance houses turning around their sort of previously bearish calls on euro, previously talking about parity and perhaps even below. But those parity calls have basically been wiped out now by this rally that we've seen in the euro as the eurozone economy has improved, and Draghi is sort of moving towards possibility of starting tapering those asset purchases. So that is driven the euro on a breakout level. But what I am seeing is obviously strong momentum, yes, and I think that you've got to go with this as an uptrend play. But the uptrend is getting quite high. I think it's quite accelerating away, and I think it's possibility of starting to see a little bit of profit-taking possibility coming through, because what we have got record long positions on net euro positions, which is going to be a weighing factor. Certainly, if you start to see a little bit of sort of negativity coming around,
I think
maybe in the news flow.
Yeah, you're right about that. The sentiment among retail seems to be going towards over bullishness on the euro. On the other hand, the commodity, the commitment traders report, COT report, shows that the insiders or smart money is bearish on the euro, so taking short positions.
Okay.
So what do you think? I mean, obviously, I agree with you. I wouldn't want to stand in front of the momentum here on the euro. But do you see? Obviously, you're right about the fact. Go with the momentum. But do you see any setups, any potential shorting opportunities coming up, or maybe just go long at the next pullback?
I would say you're still going long at the next pullback, because I think what's going to happen is that the market continues to see that the US dollar is not going to be a strong currency, given the fact that the Fed are sort of just taking a little bit of a step back from tightening. Also, the ECB is pushing ahead with seemingly sort of moving towards tapering. So I think those are two factors that are clearly driving euro dollar higher.
Let's quickly cover our next chart. I think we've got a minute on this one.
Yeah, and this is sort of an interesting play as well, because the fact is that the euro is going higher all the while. Bund under yield spreads, Bund under Treasury spreads are starting to diverge from that, and historically you see this as a very tight correlation. Basically, the yield spread tightening should be a driver of the euro dollar higher, but that yield spread has gone out. That is widening as the Bund yield has fallen more than the 10-year Treasury. So there's one of two things that are going to turn around in this chart. Obviously, I think that correlation is going to pick up at some time soon, and that will either be the euro pulling back, possibly towards that blue uptrend on the top yellow chart there, or we're going to start to see Bund yields pulling higher again relative to the Treasury yields. So I think this will be an interesting chart to watch, I think, in the coming
I think it's a good indication for the euro. Richard Perry, market analyst for Hantec Markets, thanks very much for coming to the show.
Thank you.
Thank you.